All right, here it comes. Hey everyone, this is Rob Keens at goldsilverpros.com, and I am joined by my good friend Chris Marcus of Arcadia Economics. Chris, how are you doing today?
I'm doing wonderful today, Rob. What an exciting day, and it's great to be here with you, and always an honor to be on your show.
Well, thank you. Yeah, it's been just a crazy last few days. I would go back, I guess, to about middle of last week. And we have just had a lot of crazy stuff happen. We've had a bid up in silver. Sorry, I was getting feedback from my microphone. We had a bid up in silver. We've had, I think, 61 million ounces go into the SLV here in the last few days. It's just been crazy, and we're going to get through all of that, guys. All of that talk today. Chris is going to join me for a while, and then I may go a little bit longer on my own. You guys have questions, we'll definitely answer those. Just throw them down in the chat, and we will get to it. Before we get the festivities started, however, I wanted to show a video that one of my subscribers sent to me, which I think is really cool. So we'll get that here in a moment, as I have too many screens open on the computer.
Although I do like your new backdrop, Rob. It's quite beautiful.
Yeah, you like that? I got the old Roman coins going.
Another asset I'd take over the dollar today.
You're right.
Well, that's a pretty big list.
All right, this is called Break the Comex. Actually, let me make sure I share it with sound so you guys can hear it. Share sound, and this is something a subscriber sent to me. I think it's really cool. It's kind of like one of those pump-up videos in a football game. They get us pumped up about silver. All right, just wanted to share that. I think now I'm ready for the silver Super Bowl. Okay, I'll turn it over to you, Chris. I thought it was a great video. I think I did a really good job of it.
Yeah, it's beautiful.
Now I'm all pumped up. So tell us what we've been seeing in the last few days, Chris. I know we had a bunch of money come into SLV last week, and then I think we shattered. We hit an all-time record on Friday. We shattered it. I think it was yesterday. Why don't you tell our viewers exactly what happened and what it means?
Well, I know there's a lot of commentary going around, especially in the mainstream media, about, and actually, Rob, could you pull up that, or wait, maybe I have that one here. We'll get to your link in a second. No, actually, I want to pull this one up first, because the silver squeeze last Wednesday did not exist. We had the other stocks that got squeezed. Then Thursday, there was talk about it. You can maybe label it however you want. I'll call Friday day one of silver squeeze, if that's okay. And think about what happened those last couple of days. We could look at, actually, I'll pull this up first. Here's the story from TD Securities. This came out yesterday saying the silver squeeze is dead. Tenets of a successful squeeze, a viral narrative as a catalyst, high short interest, an illiquid security in an active option market. These principles don't bode well for the attempted squeeze on silver, given the liquidity. The evidence suggests the virality of the silver squeeze has already peaked, based on Google searches trending lower.
Because that's what determines silver prices, is Google searches.
According to TD Ameritrade, that is, and that's why I think this is important. And I sure appreciate, again, Rob, you giving me the chance to speak to your audience, because I've gotten hundreds of questions, and I've tried to find a way to create something that many people can see at once, because I think this is that important. So this, that I know a lot of people saw, personally, the second I read this, I actually do have a TD Ameritrade account, and as soon as it is feasibly possible, this just does not feel right to me, and I will be leaving, but we'll leave that aside. Here, their evidence is Google searches are down, discretionary money managers, China smart money funds, and CTAs are tilted long. Rob, could perhaps you translate that into English? Does that mean anything that I'm just not grasping?
Which part? The silver squeeze, the bottom?
I mean, I can't even understand what they're trying to say there. The China smart money funds. How is this? They're talking about China smart money funds when, Rob, you just pulled the SLV figures. In fact, let's bring up the chart on that, because we had on day one of Silver Squeeze, and day goes by, people are talking about silver, buying silver, a lot of talk about SLV.
Mm-hmm.
And Friday evening, I'm sure I must have called you because I was mind blown when I saw it. They reported that 34 million ounces were added into the SLV Silver Trust.
Mm-hmm.
Put that in perspective. Here's the latest projections from Silver Institute. You can find this on their site. You got to go to the press releases page. And this is key components of silver market affected by a pandemic in 2020. Rob, I'll send you the link if you want to share that with folks. If anybody wants to take a look at this themselves. So you can see here's total supply. This is 1,000 million. So this is about 1 billion each year. Looks pretty constant except for last year when the supply went down, Rob.
Mm-hmm.
I'm surprised that they say it only went down 50 million ounces, given how long Corona shut down the mines and the impact it made. And a lot of executives still can't travel between countries, but we'll leave that. So we'll say it's going to be about 1 billion. Then here's the demand. So on Friday, when you and I were discussing it, and I thank you so much for helping to walk through this, it was incredibly helpful. When I see 34 million, so 34 goes into 100 about 3 times, into 1,000 about 30 times. So that means at the pace of Friday, when 34 million shares were added to SLV, that 30 days like that, if metal was actually added, would take the entire global supply for the world in 30 days at that rate. Okay. And Rob, again, I'll ask you, I know some of this, I'm trying to keep it a complex topic, as simple as possible. If there's anything you think I should explain again or repeat, please just let me know and I'm happy to do so. Sound good?
Sounds good.
So then so you could say what happened Friday, 30 days like that would eat the annual 1 billion ounces. But then Saturday, as I thought about it a little more, while that's true, I don't think that's the best way to put in context how big 34 million ounces is. Because here we look at industrial. Cell phones, solar panels, electronic, Biden's talking about going green. Rob, is it safe to say that it's hard to see this number coming down a lot, right?
Right.
Same photography, jewelry, silverware. You can see this has been around 500. Every person I've ever heard talk about silver says as we go electronic, it's growing. Photography, fine, coming down a little bit over the last decade. Jewelry around 150 to 200. So these look kind of stable. Safe to say?
Yeah, I think
466, 28, let's call that 500. Let's call this another 200. So that's 700 ounces about ballpark in these 4 buckets. Now here in net physical investment demand, it's 236.8. Now we see the last 10 years, 197, 271. Even when the market was getting destroyed, there's 2013, not a fun year for silver, 301, 312. So you could say these last couple of years were pretty low.
Mm-hmm.
But based on Rob, could you share your impression of what you've heard from the bullion dealers that are the companies actually selling metals? I don't know if you saw today on the front of CNBC. They had the owner of JM Bullion,
Mm-hmm.
which if you had asked me the odds of ever seeing a silver dealer on CNBC, they had an interview with the owner of JM Bullion, and he was talking about how all their silver is getting bought out. Now they're seeing the supply lines shrink up. Actually, the highlight was when the CNBC host, he looked so flummoxed and he was saying, it's like, so where, if I may ask, where are you going to get the silver from? Do you get it from the Federal Reserve?
Mm-hmm.
Which I thought was pretty funny. I don't think they're going to get, Rob, I'll ask you, in fact, if you could play the role of auditor and I implore you, like I've been for the last 24 hours, to tell me if there's any gray area or if you can find any even conceivable flaw in the logic that I'm going to walk through here. Is that okay?
Yeah, go for it.
So I asked Jonna Sheckman and Miles Franklin, it's Andy's wife, on Monday. We're seeing tons of emails. My partner Yara, who handles the bullion sales, that the orders that we get. I mean, it's just like, imagine if you wake up and there's 800 emails in your box. And it's like, you're like, all right, well, I'm going to get to as many as I can, as fast as I can, but it's like, you can't finish it. So I asked Jonna, would you say this is by far and away the most business you've ever done in the history of the company? She writes back and says, it's like toilet paper in 2020. So based on that, you can tell me if that doesn't sound accurate, if there's can you point to any data point that does not match the same level of that statement that you've heard from bullion dealers regarding silver?
No, we just had two at our conference last week, SD Bullion and Andy Sheckman from Miles Franklin, and we followed up with both of them after the conference, especially over the weekend. And they're saying the sales are 10 times, sometimes 20 times a normal weekend or a normal day. And a lot of them are claiming to have very, very little inventory.
Well, Rob, I have another question. Give me one moment. I'll pull this one up. Again, we saw that TD Ameritrade cited, they cited some data. They cited the, Google searches. They didn't mention anything about this that came out later in the day. U.S. Mint warns it can't meet surging demand. Let's go right to the statement from the Mint. There's more statements. Here's Singapore. Massive shortages, will be completely out of stock if it carries on like this. First time since their company opened. So verifying that I'm not making up what Miles Franklin said. Physical premium to papers, silver prices soared. My partner Yara says people are buying silver. They don't care what the premium is. They just want it. I've gone out of my way to put headlines in my channel, and when I go and talk on other channels in a responsible way, I'm sharing my opinion. I'm not a personal financial advisor. I just share the research, and I also understand there's different people listening, and I go out of my way to phrase things in a way that are not sensationalized. I hope that comes through, but would you say it's safe to say, Rob, that when people don't care about the premiums, is that panic buying?
Yes, it is.
U.S. Mint said on Tuesday it was unable to meet surging demand for gold and silver through coins in 2020 and through January due to pandemic. Okay, so now the Mint is offline. You see all the dealers are saying the same thing. You gave some metric of the numbers, and then to finish up back to the silver trust. So based on that, kind of hard to see net physical. We might have sold 236 million ounces in the last couple of days. I don't know. Yeah. Maybe that's a lot, but if it 10x'd, so hard to see that number coming down. So that means that, let's say if the numbers were similar to last year, or at least the same, if not bigger, demand was 931, supply was 962. And here back to SLV, you see this line here, net investment in ETPs is 350 million ounces last year. So on Friday, when there was 34 million ounces into the SLV trust, first I was thinking, well, it's 1/30th of the annual supply. It's 1/10 of what went into the trust last year. But Rob, you probably actually studied and paid attention in accounting classes in college while I was, thinking about playing the guitar or something. But would I be correct in saying that in true accounting measures, what was really available for supply to SLV in the trust last year was 31.5, not 350, because this was a deficit. That's like putting it on the credit card.
Right.
So then when you think about it, that means that what was actually available for the trust last year, 31.5, SLV claims to have added 34 million on Friday alone in one day.
And then followed that up this week with a 61 million number.
Well, that's true, which I think that's when, well, it's back. We had, Monday was 20.
Mm-hmm.
And then actually it was nice. Rob stopped by to visit last night. And I guess I was watching a video. Bix Weir put out the video showing that it was 61 million ounces yesterday. So let's put even further perspective here. So here's the 35 on Friday, which you basically, Nick Laird, who has this great site, let's give some credit to, Gold Charts or Us, well worth your subscription. Trust me, with this site will make you more than the $200 a year in the next year. I would guarantee that. So what do we have? This is the 1 year chart. Okay, so this spike is represents how much silver was added, or when it's red, subtracted from SLV. There's a couple other trusts. You can see, oh, wow, look at that. Basically it went vertical okay. I would ask, I'm not trying to be disrespectful to Daniel, but in terms of disputing the article, if there's something that I'm missing, where he sees no signs of the movement picking up, I would suggest that he should look at this, or look at any of the data points, or, we can go to, let's go to CNBC and see if JM Bullion is still on the front, where the guy there was actually on the front page this morning. So maybe that's old news by now already, but or no, I found it on YouTube this morning. Maybe somebody sent it to me, but he was there. I'm sure people can find it. So Rob, as an auditor, you remember we talked about this the other night. Remember we did an option call on Sunday. We were saying what like some guesses. Nobody knows the future, but we did it. Silver's already up $2 or so. People were excited. And, when I was thinking through what we had seen over the weekend, I'm like, gee, this is, seems like the cat's out of the bag, because it was always based on keeping a secret. And now the secret's getting out, and it's always been the most intriguing story. I mean, that's why I was writing and talking about it for 10 years before nobody cared, because it's like, I don't know how long this will be. Maybe it'll go on longer. Like when I left the floor in 2012, I would have bet huge that it would never, if you told me silver was $25 10 years later, 9 years later. And we've all learned that lesson, that it goes on longer than you think it can. But if people are buying metals, we saw on Monday that when the metal spikes up, there's a lot of interest in people buy. And as we talked about on Sunday, we said, well, there's, you would expect the banks, like the devil fighting to keep himself alive, to throw in the kitchen sink, right? And I believe, I don't think I'm going to have to try too hard to convince anyone of this, that we saw that yesterday when, in the face of historic buying, here's silver, opens Sunday night, spikes up, then gets up to, the futures got over 30, then gets clobbered last night into, actually this is, red is Monday, green is Tuesday. And Rob, again, as an auditor, I'm curious if you think, actually, could you pull up the that link I sent you now?
Sure.
Because remember, I believe it was Monday, the margins were raised. So you already have some sensitivity in the market, things up a lot. And we know how banks have this history of hammering paper on the market. I can pull up the chart of that as well if anybody would like to see it. But actually, Rob, could you go back up to the headline, please?
Yes, sir.
So here's a headline. This is Tuesday morning, February 2nd at 4:59 a.m. Eastern time. So Europe's been open, but this is while most people are still asleep. And the headline is miners decline as JP Morgan downgrades the sector and silver prices slide from 8-year highs. Now, again, as a student of neurolinguistic programming, the way I would imagine someone, and having studied for the last 20 years, including trading, research, writing, psychology research, miners decline as JP Morgan downgrades sector. Rob, if you read that, does that not, at least whether intentionally or not, give the impression a direct cause and effect? The miners decline because JP Morgan said they're going down, right?
That's right. Yeah.
So can you scroll down? Let's see. Hold on a second, Rob. Before you scroll, by what metric are they making this claim? I'm curious. Before the audience sees, we just talked about the SLV demand. I mean, you saw David Morgan on Sunday, Bill Murphy, who were around for the Hunt brothers, and I asked them, "Have you ever seen anything?" This was Sunday, even before we saw what happened in the last couple of days.
Mm-hmm.
Like, does this clearly feel different than anything you've ever seen? And they all said yes. Am I correct?
Yep.
So I'm curious. I was curious. Okay, wow, that's interesting. A lot of people buying, and JP Morgan saying to sell. And according to the way this headline's phrased, it either people sold because of that recommendation, or maybe after reading this headline, they would be led to sell or to think that might be a wise thing to do if they trust JP Morgan, despite the fact that JP Morgan last month or a couple months ago paid $1 billion for manipulating the gold and silver markets. And the silver market includes the silver price. So when you see a headline like this, I would think, gee, I'll be darn fascinated to see if they are downgrading the sector and to say to sell. Well, there's historic buying that in 3 days. Actually, Rob, here's another way of putting it. You remember how much silver the Hunt brothers acquired at their peak?
No, I don't. How much was it?
I think it was like around 100 or 110 or 120 million ounces.
Mm.
And so if SLV claims in the last 3 days 60 and 35, that's 95, and 20 is 115. So JP Morgan is downgrading the silver price recommendation, while in 3 days, SLV is reporting more metal added into the trust than the Hunt brothers owned, possibly more than Warren Buffett owned. The only person that's ever owned more silver than that is JP Morgan. And we don't even have to speculate about some of the other categories. Rob, if you maybe a little later, you can pull up their Comex inventory report. See, actually, I haven't checked that yet. I'm wondering if there's been any change in their report. But so more silver was purchased than any of these occasions. And while that buying is going on, they think it's going lower. So I'm sure that they explain where I'm wrong there. So can you slide down and show the audience what they pointed out that I was missing? Maybe you can skim through, read a sentence, or find.
JP Morgan said that the European mining and metal sector has been one of the standouts in the past year, up 150%. So they're basically saying, well, I want to point out something before we go down here, and I highlighted it. They're saying that mining is down as JP Morgan downgrades it, but the general stock market is up. So they're doing two things here. They're saying miners are down, JP Morgan's downgrading silver prices, but hey, if you go into the markets, those markets are up. So why don't you go invest in Europe? So it's kind of a shell game. It's don't look over here, go look over here. The investment bank kept BHP, its top pick, and Rio Tinto overweight, but downgraded Anglo American. And compounding some woes for some miners is a slip in silver, which touched 8-year highs on Monday, and a wave of retail trading interest. CME Group.
Rob, I'm going to get a snack. Let me know when you get to the part that they talk about the order flow. Okay, I'll be back in a little bit.
Sure. So you tell me where to go.
I couldn't find it. That's why I was asking for your help. I know you're an auditor, and I don't know, maybe I understand. I understand fully. And for anybody who's ever watched any of my videos or seen or talked to me, I know I've been fixated on silver. So I allow for the fact that maybe I'm too close to it sometimes. And, I think, Rob, you've seen my channel for a while, pretty much until the last couple of days. I think I've been pretty consistent saying this is inevitable. Even as of a month ago, I was saying, it seems like it could be any day, but, hey, maybe it could be another couple of years.
And this is something that they like to do in the financial media. They like to put out a headline like this and back it up with nothing. The first thing that they're doing is indicating or trying to link together JP Morgan downgrading the sector, which they got a lot of crap for today, by the way. There was another article on Zero Hedge about that.
Even on
so the miners are down, but if you go over here, it's all good. And then in the article, we're not actually going to address this piece of it. We're going to go talk about European stocks. So by the time you get to the end of the article, you don't know what you read that actually supports this assertion here in the title.
So Rob, I guess what is your opinion as a former professional auditor? And actually, I'll send you this one. Here is the video with JM Bullion. I'll send it there if you feel like sharing it. But as an auditor, I mean, you have experience in this. If you were auditing whether that headline, and I'll pull up the volume chart, because would you believe that we would see that same volume pattern where right on the spikes down, there's a lot of volume? Would you believe it if I showed that?
Would not surprise me.
And I will take the screen share for a moment here. Here it is. And this one, here it is. And Rob, perhaps as a little present, you've been an incredible friend to me. It's truly an honor getting to know you. So can you pull up the volume from this week on the Comex? And just for the benefit of the audience and everyone watching, can you try and recreate the face that you made while you were sitting on my couch last night when we pulled up the screen and you saw that? Can you try?
I saw this and I was like, holy shit. I mean, it was a billion ounces Thursday, Friday last week. And then I saw this and I almost fell off your couch. That's 1.6 billion ounces of silver paper they dropped.
Rob, as an auditor, what grade would you give to this? Is that possible? What would you do? You
would look at that and you'd have to say, okay, show me who's trading this and why. Because it's totally, and when you look at the settlements is really the key here. So I'm going to click on the settlements tab and you can see what these prices are settling at. It's just a slam down. So it wasn't too long ago, beginning of the week, we're at $29. So you see 87,000 contracts closed Wednesday at $26. And if you go back to Tuesday, we're going to see 211,000 contracts closing at $26,402. And if you want to go back the previous day when we had touched on Monday morning 30.01, I believe, they hammered it with 328,000 contracts to keep it below 30. It's very obvious what's being done here. It's the paper trade used to drag down the price. And that's right there in the settlement data. I mean, it's that you don't even have to be an auditor to see that. You just have to know how to read a table.
All right, Rob, I know you have a few things, so I'm just going to show a couple last things and then I will let you wrap up from there. And again, appreciate you allowing me to share this, because I think it's really important and that's what I know you've seen it. We've talked about it for years. There's a lot of people who are new to it. They see physical buying, things that would indicate people are buying, and then they go into these SLV and these products and the price gets smashed and they get scared out. We've seen that time after time again for years. And I'll just pull this up again and ask you your opinion as a former professional auditor. You showed me the JP Morgan headline at 5 in the morning, downgrading the sector, when here, so let's say this is $29, $28.80 or so, whatever price it was. I don't have the timestamp on here. So there's February 1, here's Tuesday. Just eyeballing it. Looks like, in fact, even if this was before 4 o'clock, maybe that would be even more dirty because it could certainly appear as if somebody front ran it. We also commented how margins were raised. So there's tighter margin, the conditions are tighter. So people can get blown out easier on big moves. It's more leverage than ever. You've heard Bart Chilton confirm when I asked him before, when we see these things. So this isn't my opinion. This is the former CFTC regulator who was part of the investigation and basically flat out called the CFTC a fraud. One of their former regulators, he didn't use that word, but you can watch the interview and see if that's not an appropriate, Rob, is that an appropriate recap of what the effect of his words?
Yep.
And I asked him, because I'd seen this for years, and when I finally got that one chance, I'm grateful that I got to ask him, say, my understanding is that, especially when you have like right at the $25 mark, here it was a little higher, but what I've come to understand is people nudge it, the banks kind of hammer some bids, but then stop orders get triggered, algorithms get triggered. And I mean, who knows? I mean, the JP Morgan in their confessions their traders acknowledged how when they were spoofing, they were screwing their customers. And I know there's a lot of people in the metals community who say, well, spoofing is the least of it. I will hold on a second and hear me out, because I wonder if that's a matter of semantics. Yeah, I think I would call this leveraging up and hammering the bids, just taking them out with, it's like when you short sell a stock, but there you have to borrow or locate a share. You don't have to do that on the Comex. So they just hammer the bids. But when I asked Bart, saying, whatever you call it, these guys hold the customer books. They know where the orders are. They know the charts that the tech funds read. And I said, is that your impression that they nudge it a little bit, then it triggers the stuff, it drops? And he says, yeah, well, actually, that's a really good interpretation of it. And then he talks about spoofing for 3 minutes before saying the only difference in what I asked and what he said is that now the way the markets are levered up, when they spoof, the moves are even bigger. So I would just say in the CFTC's mind, to me, it seems like they call that spoofing. JP Morgan just got fined $920 million for spoofing on hundreds of thousands of occasions. And when you have record buyers, and Rob, fortunately, we put the thing on the web on Monday morning before this happened, where we said, be prepared. It's probably coming. And what I would equate it to is when somebody bluffs at the poker table and they make a massive bet going all in, and the only way they can win is that the other guy folds. In this case, the other guy is all of the people out there who have stayed in silver and were buying silver because they called the bet. And Rob, if you can tell me any other scenario, I'm always careful of how I phrase things to not lead people inappropriately. But right before you came over, after all of that, and then I heard 61 million in SLV, and I thought, we don't know if there's a single ounce in there, except for we're trusting the word of JP Morgan, who just ran a pump and dump. Okay. And Rob, you said I could announce this on your show. I've been very critical of JP Morgan, especially in the last couple of weeks. I'm saying this respectfully. If Jamie Dimon or a representative of JP Morgan would like to speak, I'll have a civil conversation. I'm not trying to say anything behind anyone's back. I don't have any interest in doing that, but it's a crime that is affecting people. But again, that's why I appreciate you letting me say this here, because I think it's that important for people to understand. And I don't claim to know everything. That's why I keep saying you're an auditor. I've talked to many people about this today, saying somebody don't even construct a plausible alternate scenario. Give me something that's silly or like a wild conspiracy theory. But what am I missing here? And lastly, if we saw when the metal goes up, the price goes up, there's a panic to buy. And when the price goes down, people buy twice as much. So for anyone out there wondering what's really going on, I would ask you, given that, which direction does the price have to go for people to stop buying now that they know the truth behind something they've been lied to for decades about?
Mm-hmm. I don't think they stop buying. If it goes down, they're going to buy more. If it goes up, I think they'll continue to buy, because I think if it's incredibly undervalued, you don't stop until you feel like it's gotten towards some sort of peak. And I don't, obviously we're not there.
I'd say the same thing to the audience. And I'm saying this seriously, respectfully. If somebody can see something that I'm missing, I mean, by all means, I bet this aggressively today. I'm not saying it, Rob. I think you know that I've been training for 12 years to do this. I called my partner, right before the close, and I was putting things on and saying, is there anything you've heard yet? Is there anything you can point to? And even like a rumor to the contrary. She said no. I will touch my heart with my honor saying that. I'm trying not to lead people astray, but those are the facts. If somebody else can see it, please send me a message, or please go investigate it. All those, what I think has happened is that there's a lot of people, for a while, Rob, it was you, me, Bill Murphy, and, a bunch of people who watched. Now you have a whole hundreds or thousands or who knows how many people, because it was always based on a secret, but they just went all in while everybody was watching, they bluffed and they got caught. Is at least as best as I can see it. If somebody else, and again, respectfully, if JP Morgan has a representative and they can explain it, I will behave myself and have a respectful conversation on my show. People can send this interview to JP Morgan. You can cut out the clip of me saying it. I don't go around saying things about people. I've spent the first half of my life being angry and miserable. I know the danger of negative energy. So the last thing I want to do, I try to bring a good energy wherever I go. So, but there's a point at which when you see a crime, I was taught to speak up and do what I can to prevent it, so I guess along those lines, Rob, if you can add, if you have anything else about SLV, seeing what's happening. And then when it just hit me, only thing we have is a promise from JP Morgan, whether some of it's there, all of it's there, or the only plausible explanation I've heard of where that metal could be coming from, if it is actually in there, is if JP Morgan is depositing it. And Rob, maybe before we wrap up and I'll let you do your thing, could you pull up JP Morgan's Comex? Interestingly, they had 160 million ounces back in July when those July delivery hits. You remember how the first day 30 was switched into the registered eligible, or the other way around? I get those confused. You remember what I'm talking about? Amazingly, despite paying $1 billion, they now have 190 million ounces. And I was curious if that has changed. I might add, for all the people watching at home, if you've ever wondered if you can make a difference in the corruption of these markets, people go through these reports, go through the Comex site. If we have hundreds or thousands of people all compiling evidence, I know there's new groups on Reddit forums, there's new groups everywhere. Talk with your friends. You can find this stuff. They got caught. The evidence is there. I'm going through as much as I can. I know Rob is, and other people, but keep spreading the message, sharing the stuff. And I'm putting as much on my Twitter feed or in the videos, or sending out. I'm taking the time to write things so it can be as clear and easy to understand and verify, so you don't have to take my word for it. Maybe I'm wrong. Maybe I just missed something here, or there. So you can, all these things you can check. And what do you got there, Rob?
All right, this is the metal depository statistics for Comex and JP Morgan. Ooh, look at this. They're sitting at 193 million now. That's quite a bit more than they've had. Yeah.
But this was, I checked, I think it was last week, and it was at 193 million. So that's another thing.
Yeah.
In case, Deso, if you're watching, I know you do a great job of tracking this. Keep us posted. Rob, if you find stuff, it's like, my last thought, and then I'll promise I'll stop this time, is that I spent the last decade, is when I found out about the silver thing, thinking, all right, if you were at Enron or Bernie Madoff, even if you were like sweeping the floors there, you know, when something's unraveling like that, people start getting nervous. You know, it's like The Big Short. They said, where were the signs? Well, they looked. How'd they find them? They looked. So that's where the Big Silver Short book came from, where the channel came from, where it was just, I never guessed it would take this long, or that this is how it would finally unfold. But I remember thinking, all right, what are the signs that you would see right before the thing's finally about to go? And again, I'm a human. I can't see tomorrow, but as someone who's been trained to investigate, I at least put a large, almost the majority of my money behind it today. And if anybody else can help me figure out, or if Jamie Dimon or a representative from JP Morgan would like to disprove me or discredit what I'm saying. Lastly, there is a hedge fund run by Daniel Shack that has already taken a case to JP Morgan, and JP Morgan settled rather than go through the discovery or court process. I don't believe that they would ever do that. And intriguing to think, if you find out what argument he used to get them to write a check, I think that's another option available to people. And now, especially because this latest, Rob is an auditor, would you say can you see, and what could JP Morgan say to you that would make you feel that that headline and this trading action was not a felony?
Show me the data. So I would want to go audit their books. I mean, nothing they could say to me to make me believe that. I'd have to see the actual data, the transactions, and all of that to believe it. You'd have to put it right in front of my eyes, because the evidence that we see that's available to us doesn't add up. It very clearly does not add up. They would have to prove it.
So there, I'll add that if JP Morgan would open their books so a professional auditor could look, I would be happy to apologize if anything I've said is incorrect. I know that I would be liable because I've said it forcefully, but I think it's that important for it to be clear to people. To be clear, my background included 2 years at Moody's, going to Wharton for an MBA, 7 years running an equity options specialist post, American Stock Exchange and New York Stock Exchange, before as I began researching this. In fact, and I also had a large option position on in 2011, so I was trading it back then. And when I got hammered on that, I don't think it was that I couldn't accept it, but I'm thinking, all right, well, it's weird that this came down when they're printing more money than ever. So that was what I was never able to get away from it, because it's like I never found an explanation. And if there's something that I've been incorrect about all these years later, and JP Morgan will allow a professional auditor to take a look at the books, then I'll have to deal with the consequences. But I will invite them to that process. And
you would not have to deal with the consequences, because they haven't made it transparent, and they've invited these questions, and they've been asked about it in the press.
And they've already been caught. They paid $1 billion. So
and the CME Group and the CFTC have been asked about it, as the metal depositories and the regulator, at least on the Comex side of the market. I asked 2 directors point blank, and they declined. So if you're going to decline publicly, you can't then come back and say you're spreading misinformation, because we provided ample opportunity for them to come and talk about this. They've had their chances.
Appreciate you having me on, Rob. Thanks so much. And thank you to everyone who's been watching and following and supporting my channel, Rob's channel. I think there's good news coming. So.
Yeah, thank you very much. Chris from Arcadia Economics has a really good YouTube channel, also a dealer for Miles Franklin, also arcadiaeconomics.com. And please go watch his videos that we did this past weekend at the height of the silver squeeze. He was there. I think we did 2 or 3 3-hour videos, didn't we, that are on your channel. So tons of information there. Not only Chris and myself, but many other commentators, Alistair McLeod, David Morgan, Ronan Manley, other very well-respected people in the space. Go check out Arcadia Economics YouTube channel. Thank you very much, Chris, for joining.
Thanks so much, Rob. See you soon, bud.
All right, bye-bye. All right, that is the awesome Chris Marcus, Arcadia Economics, the guy who did the interview with Bart Chilton, who exposed the short silver position that JP Morgan took over during the last financial crisis, put it out there in the public. That is a matter of record on video and audio. You can see on Chris's YouTube channel, and as well on his website, Arcadia Economics. Always good to have Chris stop by. He has another appointment to get to. So I'm going to take you guys the rest of the way. And what I'm going to do is get into the data analysis and dig a little bit deeper into what Chris is talking about, what we were going back and forth on, just to provide you guys a little bit more chunky data, because yes, I am a former auditor and I like to get into that. So we're going to share that for you guys. I'll take you maybe 30, 40 minutes. We'll see how long this goes. And then I will let you guys go and go share your evening with your families. If you guys have questions, I'm watching chat on my other computer over here. Hit me up on the chat and I will do a question and answer session as soon as I get done with the main data presentation. All right, here we go. So I'm just going to start off by going to gold price. You can see that silver's down at 26.89. It's down a little over $3 from where it was early Monday morning, about 3 a.m. my time, Central Standard Time. And you can see on the chart, if we just, let's do not a 1-day chart, but let's do a 7-day chart on silver. You can see it going up and then coming back down. Not sure why that's not refreshing. Let's go back down here to this silver chart. Well, this chart's a little bit better. It's more of a live candlestick chart, so we can see exactly what's going on with silver. Let's specify the time frame. Let's just do 5 days. That'll cover the Monday price. You can see exactly what Chris is talking about. Whenever the price is falling, this is the one I covered the other day, you see massive volume spikes. Price falling, massive volume spikes. Price falling, massive volume. Price falling, massive volume. So that is a clear pattern anybody can see on a chart, and you don't have to be any sort of certified financial planner or analyst. It's just adding 2 and 2 together. We have these massive price gaps down, or smashes, if you will, whatever you want to call them. The price has fallen an exorbitant amount of money in a very, very short period of time on volume. Price is falling in a short period of time on volume. Price is falling short period of time on volume. And the bigger the volume, the bigger the price, or at least the more rapid the price decline on volume. It's a clear, you're getting it clear right off the chart. It's not rocket science, but we are going to go into some of the data. Now, I do challenge anybody who trades the futures market, who's an expert in that space, if they want to go, yes, I will discuss position limits and then what. Let me get to that here in a moment. We'll talk about margins as well. So you don't have to have a degree and have to be a CFA to understand this stuff. But I'll challenge anybody who's done the futures markets before, if they've been a trader and they want to come on and show their screen or show some data that they have or show their experience, I'd be happy to have you on. I'd love to have you on. All we can go by is what's publicly available, right? So we don't have access to the insider transactional data. I've said that a million times. I've actually asked the Comex for it. They declined. I asked them to have an analyst walk me through at least, high level data so that they could explain that their numbers are correct and nothing to worry about, and they declined repeatedly. And I have that in email as proof. I'm keeping that in email as proof in case we ever need to show that. But they've had their opportunity. So, hey, we're going to go by what's publicly available. If the powers that be, that are regulators or the people that run the markets or the big traders on the market, the bullion banks, want to come beg to differ, a couple options. You can come on the program and talk about it. You can show us the data. If you're not going to do that, though, and the only data we see looks like this, then hey, we're free to speculate. And it is speculation. We're not financial advisors. Make that disclaimer. Nothing here is financial advice. We're not telling you how to trade or what to do. But at the end of the day, we're just looking at the data and making inferences from it, common sense, everyday inferences about what we think is happening. All right, so let's get into the news without belaboring that point. There's been a lot of news coming out in the financial press about how the silver squeeze won't happen. We saw earlier in the presentation with Chris how JP Morgan's downgrading silver, and then a lot of these financial sites are saying, silver's, it's not worth investing in. And it's been coordinated because you saw it all across the financial news media right after you had the pop up to $30 on Monday morning, and then you saw the slam down in the futures, and it's like a 1-2 punch. You slam it down with the futures trade, which is what determines near-term prices. And then you have all the negative press come out to kind of influence the trader. So I guess when the traders are going back to the futures market, they're like, oh, okay. Everybody's saying, it's not a good trade, and it dampens the long momentum is essentially what it does. So they do it 2 ways, through the media and then through trading a lot of the short paper, which we've documented. So this here is saying the GameStop crowd could be engineering a silver squeeze next. I do not believe this. I don't think this is the GameStop crowd. Now, some of them could be in on this. I think it's all of us, the precious metals guys, the silver bugs, whatever you want to say, people that are opportunists that see the shorts in silver and want to do the squeeze. So I'm not giving credit to GameStop crowd. I've gotten criticism from, I think, the Reddit channel and saying that I said it was a GameStop crowd. I didn't. I said that movement against financial suppression in the stock market has spilled over to the silver market because it was natural, because silver's at the bottom of Dexter's pyramid. I went to this at length in my last video. Look at my last video, I believe, from Monday, and I explained that 3 to 4 times. So just want to clear that up. It says here, silver did rally earlier this week as dealers saw supply wiped out over the weekend by flood of buying, and that did cause some excitement as price jumped over 30 for the first time in 8 years. But it says before you jump on board, there are things you need to know why SLV won't be squeezed. First, SLV is not a stock, it's an ETF. That's an important difference. That's true, although you can short ETF shares. It says GameStop has a fixed number of shares outstanding for every buyer that has to be a seller. That's not the case with SLV. If there's excess demand, they can create shares as needed to fill that demand. Now, this is, okay, they're saying that you can't short it because they can just create shares out of thin air. Yes, but the SLV is purported to be one-to-one with actual silver ownership. So if they're creating shares out of thin air and you don't have the silver going into the fund, does that mean that SLV is really tracking the price of silver and is backed by silver? No, obviously. So this is, you know, when they make these excuses in the financial press, a lot of times they give you what is the bigger bombshell. This is the biggest bombshell in this whole article. If there's an excess demand, they can create shares as needed to fill that demand. As needed, not as the amount of silver available in the physical silver in the market. As needed, so it's impossible to create the type of squeeze. I would agree. I'm not trying to squeeze SLV, but if you can create such an influx of demand for the physical silver and it's found out they don't have it, then SLV ceases to exist as having anything to do whatsoever with the silver market. So I've been talking about you can't squeeze SLV in the traditional sense, but you can kill SLV. You can kill the credibility where the fund expires and the shares are worth nothing, because according to the authorized participant in the prospectus, only the authorized participants can take or can provide or take physical silver. If you're a shareholder, you can't have it. So it really has no relationship to silver whatsoever anyway. And if they can create anytime they want shares to offset a short squeeze without backing it with the metal, and that tells you right there, it's not a legitimate silver fund anyway. So do I even need to go any farther in this article? So they're admitting that SLV has nothing to do with the physical silver market, and what they're trying to do is discourage people from shorting SLV, but they just dropped the bombshell article. All you got to do is read between the lines. They'll tell you what they are if you just listen to what they say. They'll tell you what they are if you just listen to what they say, and they've outed themselves as what they are. It's not hard to figure out. Silver prices rise after online attention. This is in the Wall Street Journal. It's being talked about here. Silver has rallied in recent trading sessions after users on Reddit's Wall Street Bets forum posted about executing a short squeeze similar to one created fueling recent gains. Okay, now, people that are telling me that Wall Street Bets and Reddit are not the ones initiating the silver squeeze, I believe you, but you need to go tell the Wall Street Journal, Reuters, and Bloomberg and CNBC, because they're the ones reporting it. So don't jump on my channel, please. They're the ones reporting it, not me. So it's the financial press saying that it is Wall Street Bets and Reddit, not me. And I've said multiple times on my channel, I don't believe they intentionally wanted this to go over to SLV or silver, physical silver in general, but I think it naturally spilled there because physical silver is money. It's at the bottom of Dexter's pyramid. The Wall Street Journal clearly says it, and that's why I want to bring the article up. If you're going to criticize somebody for making a statement, you really need to criticize the financial press. Anyway, they go on to talk about in Wall Street Journal. It's kind of interesting article if you want to go there. Now Reuters, and the interesting thing is silver's getting so much press, and I think, you know, the articles are trying to discourage people from looking into it, but when you see something like silver, which almost never gets press, get press across all of the financial sites, then all of a sudden you're going to get more people interested, or at least curious to learn more about it. And I think that's working into the hands of silver investors and the silver market in general. It's not working against it, no matter what they print. Reuters says the United States Mint said Tuesday it was unable to meet surging demand for its gold and silver bullion coins in 2020 and through January, due partly to pandemic-driven demand and plant capacity issues. So the Mint cannot keep up with the demand in the U.S. for the U.S. coins. Well, I should say for U.S. coins, not only in the U.S. A social media-driven buying spree lifted silver futures to an 8-year high on Monday, but dealers in the market for coins are already grappling with the supply shortage and shipping delays before the rally. Now, this is a completely bogus statement. I'll tell you why. A social media-driven buying spree lifted silver futures. Okay, social media can't lift silver futures. You have to trade on Comex. Most of the Comex traders are big parties, either wealthy individuals, bullion banks, hedge funds, so on and so forth, family offices. The average retail guy doesn't go to the futures market. They go to SLV. So if you want to say that SLV affected people's perception of silver that then went and traded on the Comex, okay, I'm fine with that. But this is a really lazily written article, and this is the type of crap sometimes that you see in the financial media. And the person that wrote it, Devika Kumar, probably didn't intend it to be sloppy, and I'm criticizing. I'm sorry to criticize, but I mean, look, if you're going to write the article, understand the market and write about it. The Mint, a division of the U.S. Treasury, had limited distribution of silver coins to suppliers, is currently changing the designs. Yeah, who cares if they're changing the designs? I don't think that's the main reason. It was the incredible demand. We talked about on Monday how all of the online dealers had anywhere from an 18 to 30% premium on the physical. That's essentially what created the shortage. It wasn't because, oh, they're switching from one design to an, I'm sorry. Because what happens is, yeah, they could be switching designs, but all of their past design that they have minted and sent out were already in inventories. That's what got drained. So yes, now there could be some second order effects of them switching designs, but that's not what caused it over the weekend. Let's just use logic to talk about that. Once you change designs, then the production going forward, but they had already had production from the past that the dealers had stocked up. And we talked to Andy at Miles Franklin. He bought more silver than he's ever bought. He said that on a conference call on Chris's channel this weekend. So a lot of them had prepared for this. SD Bullion basically said something similar. JM Bullion said something similar. They've been stocking up at the low prices of silver. And so that's not really an excuse. Anyway, I just want to point out some of the, maybe the lack of appropriate knowledge or just, mistakes that the financial media makes, that if you don't really know how the system works, you may want to pay attention to that. Okay, I wanted to point out here where, because of all this excitement, you have people buying physical silver, and then you have people going into these ETFs. And we talked about the SLV. The SLV took in, this is 1,154 million. So that's $1 billion from January 26th to February 1st. The last time I saw this pop up on the top 10 ETF fund flows, and that's not just commodity fund flows, it's all ETFs, all tradable ETFs. The last time I saw it show up in the top 10 or even the top 3 was back when we had that July spike in silver, when it went up to 30 bucks an ounce from something like 14 or whatever it was. That's the last time I saw this show up. So it showed up in a big way. It's been about 6 months, but silver finally showed up on the top ETF fund flows. That's the SLV. That's the one that JP Morgan's a custodian of. And that's important. I'll get to why that's important here in a moment when I show you the custodian docs. So we also want to look at another one. And if my presentation software will let me, I will get over here. We're going to talk about the Aberdeen Standard Physical Silver Shares ETF. By the way, and a lot of people don't know this one is also, the custodian is also JP Morgan. So JP Morgan's custodian of 2 of these silver funds. This is the SIVR Aberdeen Standard. Now they had 33 million. It's not as well known as SLV, but they're custodian of that one. Isn't it interesting that JP Morgan's custodian of 2 separate ETF funds for silver? Really? 2 separate ETF funds for silver that had a lot of flows. I'm going to get on here in a minute to why it's important that JP Morgan is the custodian of those 2, because they were fined for manipulating this very market, the precious metals market, almost $1 billion. We'll get to that here in a moment. So if you're fined $1 billion for manipulating the precious metals market, how are you custodian for 2 precious metals funds? It's really interesting how that works. So here we go on silver future settlement. I kind of gave this away a little early when Chris asked me about the settlement data, but the reason why the price of silver is falling, let's go back to the volume chart. This is the volume chart. This volume is futures volume. So I'm going to take this in the chart and show you what that is by looking at the actual flow data on the CME Group's website. You just go cmegroup.com, or you can just Google silver volume data, CME, and you'll get it. And this is the data that I fell out of my chair last night looking at. It's over 300,000 futures and then enough options to take it up to 400,000. The options are the light blue. That's like an all-time that I've ever seen. I don't know in 2011 if it were more than that, but my goodness, That's $1.6 billion of paper silver dumped. And if you look at the settlements, let's go and look at the actual settlement data. Sorry, I got to scroll up here. The actual settlement data showed that the price was lower than what silver was at the time. So if we look at Tuesday settlements, we're going to click Tuesday here and refresh the page. 211,000 contracts trading at 26,402. Now we had been at about 28 bucks when this hit. I think when I stopped following silver on Monday, it was like 28 something. So it closed about $2 lower, 211,000 contracts of 5,000 ounce silver. That's 1 billion ounces of paper silver, dragging the price down from the 28s to the 26s. That's what you see on this chart. What I'm showing you is the actual volume data, which is this. I'm taking this off the chart and showing you the actual volume data. It's right there in the CME Group's website. And then followed up today, the numbers are available, 91,000 contracts. So what is that? That's almost 500 million. That's 460 million ounces of paper silver, not real silver, paper silver. Now we did have 61 million ounces supposedly of physical silver go to SLV. This is 500 million. You see the differences? The paper market is so much bigger. Even if you accept the fact that JP Morgan's actually putting the real physical into their fund, which I'm not exactly sure that they are. So we're going to keep going here. We're going to speed this up and get to the Q&A. So here's the COT report. For those of you who haven't been following my channel, or a lot of people's channel talk about precious metals, this comes from the CFTC, which is the regulator for the commodities markets. And this is as of January 26th. This date is usually a week to 10 days behind. So we're not going to see all of that volume that I just showed you on the bar chart on the CME Group's website. You're not going to see those positions, but we are going to see last week's up until February 1st anyway. And we're going to look down here at silver. This is silver right here. This is a disaggregated report. And this is what I want you to look at. The concentrated short position of the top 8 shorters, which is the swap dealers. Swap dealers are also known as bullion banks. And they're short 30.5%. Overall, the top 8 are short 47.6. So the bullion banks are short almost 50%. And that's before the last few days' data, where they were dumping 311,000 contracts. I'm sorry, 211,000 contracts at 26 bucks. It's the bullion banks that are short. You can see it in the COT data. Now we'll get this week's data next week and we'll come back and talk about it. Almost 50% owned by 8 traders, 8 or less traders, and 35.9% owned by 4 traders. That's what you call a concentrated short position by the big dudes. And we know who it is because most of the shorts are owned by who? The swap dealers. This is the swap dealer column. The other biggest short are the producer merchants. Now, the reason why the producer merchants have it is because the producers themselves produce it, and so they want to hedge downside risk to their price, so they'll go short. Sometimes the dealers will, but usually the dealers will go long because if silver price rises, that's more of a risk to them, unless they have silver inventories. But if you're talking about them just buying silver in the market, they'll take a long position, not a short. But if they have a lot of silver built up, they may take a short to offset price risk if they're going to be holding it for any length of time. But the concentrated, most of this is the bullion banks with a little bit the producers, but the vast majority of the bullion banks. Who is JP Morgan? A bullion bank. So JP Morgan is shorting the market. Okay. Okay, wait until I can get up to this tab. JP Morgan is shorting the market. Remember, we're going to go back to Tuesday data. They were a large part of this data reported on Comex as 211,000 contracts, about 1 billion ounces of silver settling $2 below what the daily price was at the same time that they are the custodian for the iShares Silver Trust and the custodian for Aberdeen. You think there's a connection there? That JP Morgan would be one of the biggest players on the Comex shorting the paper? And they also happen to be custodians over 2 funds that supposedly have physical. I find that to be interesting. So let's look at that COT chart in a picturesque format. This is off of Nick Laird's site, Gold Charts R Us. Again, well worth a subscription. Well worth the $200. He tracks the data from the Comex over time, whereas the Comex drops it off. And then if you want a time lapse of Comex data, you have to pay a lot of money for it. This is a lot cheaper, and his charts are really cool. The most concentrated position of any commodity on the CME Group's 4 exchanges just happens to be silver. What are we talking about here? Silver, then platinum, then gold. The top 3 concentrated short and long positions are in the precious metals. more than the other commodities. Ladies and gentlemen, it's been that way for at least 10 years that I've seen, and it's not a coincidence. Look at that silver short position, and it keeps going up. Again, just another way to look at the data. All right, let's go over here to the CME. All right, now, somebody asked me before about position limits. I haven't seen an announcement on position limits. Position limits is how many positions you can take as an individual trader. They could change that, which means they could change the shape of who is trading and how much they're trading. I haven't seen an announcement, but we'll keep our eyes out for an announcement. Reuters will probably report it. CME is supposed to put it on their press releases. I haven't seen one yet. Doesn't mean there isn't one coming. The other way that they can change the shape of the trading, the volume, and how many people are taking positions and what size positions is by raising the margin. The margin, think about it like you're getting into the, you're going to Schwab or E-Trade and you're trading on margin. You put, in other words, you're borrowing stock, but you're not funding it with cash, but you'll put a little bit in as sort of a guarantee that you can back your positions. You put in some margin. Same thing happens on the futures market. If they take a contract, they have to put in a little bit of money, skin in the game, in order to get in that contract. And that's called margin. If you raise the margin per contract, it means for the same amount of money, you can buy less contracts. So the smaller players on the market can buy less contracts. The bigger guys that have billions of dollars, it does affect them, but in reality, they can still put on more contracts. So what it does is it moves more concentrated positions into one side or the other of the trade because you have less diversity of who can get into the trade. Why? Because you're raising the margin. You're raising the skin in the game to get in the game. And this works in the hands of the big players on the market, and it tends to slow long price rallies. And this happened where they went from 14,000 to 16,500. I think it was like a 28% increase in margin in one day in silver at the beginning of the week. And that's what they're talking about here in this article. Fox is talking about CME raises silver margins after surge. After surge, that's the key. They saw the surge in price and they raised it. Now, the CME group will do it because of price volatility, because if the price is really volatile, more people could get stopped out of their futures trades and they need more margin, which is legitimate. But silver wasn't particularly volatile. It went up a couple of $3. Okay, and it didn't fall down until you had the future shorting by JP Morgan and the CME raise, or JP Morgan, the other bullion banks, and some of the producers as well. We saw in the call report, but also the CME raising the silver margin. Okay, when you raise the margin, that changes the shape of the trade. Okay, it changes how many contracts can get in there, bid it. You're changing how many people can come in and go long or short, and the CME group cannot claim otherwise. It's just a math problem. If you have X amount to trade and you're raising what it takes to get in, you can do less contracts. And so the CME itself changed the shape of the trade at the same time JP Morgan was, and legitimately other bullion banks, and to the producers to some extent, were hitting it with short paper that we've seen. So I'm just explaining the mechanics of how this works. I know this seems really dry to some of you, but I want to explain how it works. There's tons of data here. This is an article that Chris and I talked about earlier where they print an article which doesn't actually have data in here to show that the title is correct. So the title is misleading, but a lot of people just skim titles. Miners decline as JP Morgan downgrades sector and silver prices slide from 8-year high. Well, JP Morgan did downgrade the general commodity sector, including silver. They went neutral at the end of the year. In December, I read an article, I think it was on Reuters, about that. And then the miners might have declined, but that's probably because silver was getting hammered in the paper market, which was JP Morgan and mostly the bullion banks. They held the largest concentrated position. We've shown those facts from the CME Group's website. But when you get into the document, they don't talk about that. They talk about other things like, why don't you go over to European miners? Why don't you go trade in China? And it has nothing to do with the title. It's just misleading. And I don't know if they intended to do it, but it is. It's a fact. I'm not saying they intended to do it, but it's misleading. Okay, now we're getting into who is the custodian. I told you earlier, the SLV, which is the iShares Silver Trust, the custodian is JP Morgan. So it is right here on their website, iShares.com, in their literature, JP Morgan, the custodian. Who's the custodian of Aberdeen, the SIVR? Ladies and gentlemen, that would be one, JP Morgan. Why does that matter? Why does it matter that JP Morgan is a custodian of these supposedly physical silver trusts, if you believe that they, especially the SLV, took in 61 million ounces in a day, and then 100 million ounces over 3 days? Why does it matter? Well, because as Bloomberg reported September 16, 2019, I think it was the U.S. Department of Justice, said that J.P. Morgan's metals desk was a criminal enterprise. So J.P. Morgan had been manipulating the markets, but yet, and they're continuing to do so, we think, based on the data available from the CME Group on the Comex. And there also happened to be the custodian of the physical silver. That's like the fox guarding the henhouse. What's going on there? U.S. prosecutors took an unusually aggressive turn in their investigation of price fixing at J.P. Morgan Chase & Co., describing its precious metals trading desk as a criminal enterprise operating inside the bank for nearly a decade. A decade. And there was an article in Reuters that came out late last year that said last year alone, J.P. Morgan made $1 billion just from trading, just from its gold side of its trading desk. And they've been manipulating for at least a decade, according to the prosecutors, U.S. prosecutors that work for the government. And not to be outdone, J.P. Morgan to pay, and this was in September of last year, J.P. Morgan to pay $920 million for manipulating precious metals treasury market. So they were fined $920 million by the regulators. They admitted to wrongdoing. They admitted it in federal court. They settled for almost $1 billion for 10 plus years of rigging, while they made $1 billion in 1 year. And the U.S. prosecutors called them a criminal enterprise, but yet they're the custodian of the Aberdeen and of the SLV. So for you guys going long SLV or the SIVR, why? You've got somebody that the U.S. prosecutor is calling criminal enterprise running that market, going into Comex and shorting that market. Why? Because we see it in the COT report, which I'll get to here in a minute, the CFTC COT report. Why? Because it's the swap dealers, which are the bullion banks, who are the most short. I mean, this is just data. Guys, I'm just showing you data. I'm not making irrational comments. I'm not here trying to slander anyone. I simply look at the data because I'm a former auditor. I look at the data and I show you what I see. I'm sorry, that's just what I do. That's what I see. And all of the data, I laid it out for you. So Chris and I talked for about 40 minutes on what's been going on in the silver market, the fact that SLV took in 100 million ounces in 3 days, but where are we getting that when all of the dealers are short? Okay, and then the SIVR took in a lot as well. Where are they getting it? Where are any of the ETF funds getting it? Is it a Ponzi scheme? I'm going to throw it out there. I'm going to ask a question. Is it a Ponzi scheme? Does SLV and SIVR, for that example, the smaller of JP Morgan's funds that they're custodian for, do we have proof that they have the metal? I know there may be some bar reports, but I want to see the audit reports and I want to see the inflows, especially when we're in such a tight market. Where are they getting it? I'm just asking the question. And when you run what U.S. prosecutors call a criminal enterprise, and then next year they fine you almost $1 billion, isn't it legitimate to have those questions? Is that out of the realm of legitimate logical thought to have those questions? And then when we see the trading, of which JP Morgan is a large part of the largest 4 and 8 traders, the bullion banks slamming short paper by $2 to the tune of 1 billion fake ounces of silver on the Comex. Does this not all raise questions in your mind if you're following this market? We need dots connected. And again, I've invited the CME group, 2 of the directors of the CME group to join me and show me how this works. Other people have invited the CFTC, the regulator, to show them how this works. I think all of us have invited a member of JP Morgan onto our shows to see how this works. But I mean, it looks very incriminating and very sketchy and very, like, you know, from a numbers perspective, it just does not add up. So do we advocate going long SLV? I'm not your financial advisor, but I'm not. For the reasons I told you, I would buy physical, or I might buy a silver stock, or I might buy an option. That's what I may do. What you do is up to you. I'm not your financial advisor. This is not meant for financial advice. It's meant for entertainment, informational research purposes only. Consult your financial advisor. Do not trade off of this. We are not responsible if you trade off of this. There's my disclaimer for a second time. But in any case, I mean, we just question things. And that's what I used to do as an auditor. I would just look at the facts and I would question things. So I just threw the data in the news at you. I didn't use sketchy resources. We used Bloomberg. We used Market Street. We used Reuters. We use CME Group data. We use CFTC data. We use articles from major media. We use ETF fund flows, you know, that are publicly published. And we've talked to physical dealers that's on tape saying they're out of silver. You know, I don't know what to tell you. We just, what else are you going to say? All right, let's get to some questions. I'm going to go reload the chat in my other window, guys. Let's see what you guys are saying. I'm interested to see what your thoughts are on what's going on here in this market. And if I can get over to the chat on my window. Here we go, ladies and gentlemen. So let's see what questions we have. Boy, I got to scroll way up. I've been talking for a while. The big Richie Rich says the big industrial buyer should be time to wake up to buy all the physical silver for their products. I agree with you. I think they're doing that. I think Apple has looked at doing that. I know that Samsung, this is public because I've spoken to Management Impact Silver, ISVLF, I think, on the US OTCs. Check that ticker symbol. They have a deal with Samsung. Samsung buys their silver. It wouldn't surprise me if there were lots of other deals like that that just weren't announced. When we see negative articles coming out, we know they are in let's stop this mode. I agree with you. It's all lies. I'm not sure. Hey, Frank Imperato, tell me what all the lies are, please. I'll let you come back on and tell me what the lies are. I don't know if it's all you're saying the market is lies or what I'm saying is lies, but I used, I think, commonly available resources. So if you think something I had, you had the URL in the bar, you can look at it yourself. You can stop the video, on a replay and type it in. If you think that Bloomberg and Reuters and CME Group are lying, that's fine. I might agree with you there, but we're just showing documentable resources. But come back on the the chat and tell us what you think is a lie. Who would win in an arm wrestling match, you or Keith Newmeyer? I don't know. I've never actually met him in person, but he's a pretty energetic guy. I might give the advantage to him. I'm more of a soccer player, so I don't know. We'll have to see. That's a good question. Okay, Lenko Bear says, question, hey, Rob, has JP Morgan ever explained or do you know the logistics behind SLV and how and where they source the metal? No, I've asked tons of people that are experts in this market and nobody knows where they get it. Do they get it off the Comex? Do they get it through OTC contracts, private trade? Do they buy it from manufacturers? I honestly do not know. And I've never seen anybody answer that definitively because they don't have to publish the data. So they could say in general, we get it from these places, but that doesn't really tell you where they're getting the bulk and when, and that data is not published. So I don't have the answer. Let's see. Why has no billionaire tried to correct this? That's a good question. Maybe they have. Maybe all the inflows in SLV are billionaires or sovereigns or somebody big getting involved. I would say it'd be better if you did it on the Comex, but oh my gosh, guys, something else I wanted to show you on the Comex. Let me get to that real quick. I have got to show you this on the Comex, and this is something I pointed out some time back. It's called exchange for physical. The exchange for physicals have jumped off of the chart, and exchange for physical is where you take a futures position in the US market and go to London and get the metal. At least that's what I've been able to gather from documentation at CME Group and on the internet. The exchanges for physical have blown out. There were, as of Tuesday, there were 5,802 exchange for physicals, this EFP column here. That's where you're not able to source it off the Comex. And so then you get it off LBMA, or either you're not able to source it or nobody wants to give it up. In other words, everybody could be hodling here their metal on the Comex and not giving it up. But look at this number. I've never seen a print this big in silver. 13,716 contracts in which people were hodling on Comex. So you couldn't get the metal physically delivered against a long contract on the Comex. So you went over to the London market and you got 13,000 contracts of 5,000 ounce silver. Can you believe that number? That's insane. So I think that means that whatever metal exists on Comex, if you believe the numbers, don't believe the numbers, people are holding it, right? Hold on for dear life. And they're having to go to the London market. The London is supplying the silver to the Comex market right now through that EFP mechanism. I think that's pretty darn astounding. And that could mean that there's a lack of liquid tradable metal. There could be metal there that's in private storage, or maybe the Comex said, no, we want to prefer settling cash so we don't run out for whatever reason, volatility, whatever reason they want to give. Or maybe people are finding it cheaper in London. Maybe the real price to get physical on the Comex is above the spot price of the futures. I have no idea. We can just speculate. I don't know. All right, let's see. Yes, that's right. Fantasyland, LBMA better hire more guys for the loading dock. I agree with you, Northwest Gardener. All right. If people stop buying, premiums will go down. Well, yeah, that's true of any market. If people stop buying, premiums will go down. If people continue buying, premiums go up. That's supply and demand. I don't disagree with you there, Frank. Take that point to the next level and tell me what you think that means. Do you anticipate that people are going to stop buying? Do you think that there'll be an impetus to stop buying? What do you think that impetus will be? What do you think is the cause and effect there? Good comment, though. Thank you for commenting. Jeffrey Meyer says only buy physical. That's what I've been saying. Apple and big industry in on the game, probably Dale Vol. It could be. And then what it says, when this breaks, something will happen that you remember exactly where you were, sort of like, I hate to use this example, but everybody uses Kennedy assassination or when we landed on the moon or, some big event in Game of Thrones or whatever it is, some cultural reference. And I agree with you. I think this will be, if silver pops as big as we think it could, it'll be something people will remember for 50 years. You're not hurting anyone by buying silver now. Again, Frank makes a comment. All you're hurting are the stackers. I disagree, because if you're buying, that seems to put upward pressure on the price, because eventually if you run out of silver, the SLV can't get it. They're going to fold. The Comex would then fold as well, or lose all credibility. And I think that would be bullish for the price. So I'll disagree with you here. But I did, Frank, I did read 3 of your comments, even though I kind of disagree with the last one there. I did read them, so I did address that. Jason ISF, Rob, will Basel III NSFR rules break the paper market this year? It could be. Now, the NSFR rules, as they apply to the LB May, there's a little bit of an argument there. According to Basel, they're supposed to apply on June 28th of this year. Both the UK government on their website and PwC on their website, which is their auditor, have said it won't be till January 1, 2022 of next year. Although rumor has it that some European banks are complying with it right now before June. We'll have to see how that plays out. We'll have to see how many banks comply with it now versus later. It's impossible to tell, because if participating banks are just refusing it, what teeth does the BIS have, and how can they force the hand? I really don't know. That may be up to the lawyers. We'll have to see what happens there. But I would say stay tuned. Stay tuned, especially around the May-June timeframe, because we should start hearing some rumblings about how NSFR affects the London gold market in that unallocated market. If you want to know what I'm talking about, go back to 4 previous videos I did on this channel the last month, from like December 29th through late January, where I talked about Basel III and NSFR 4 times. Okay, Albano Samosa, your thoughts on SLV versus PSLV versus physical? If people were buying to try to blow up the market, I think always go physical. Because it's safer for you. Now, again, not financial advice, but let's put it this way. I would go physical because it's safer. It's not a derivative. PSLV, supposedly, according to their prospectus, takes physical 1-to-1 with the share, the derivative portion of it, and you can redeem it, I think. Someone correct me if I'm wrong. So, and the reputation of that company is really good. So that may be your second choice. The SLV we have, if you look at the perspectives, there's all sorts of things that they say you can't guarantee the metal, blah, blah, blah. So I would say SLV to me is the riskiest. I wouldn't go that way. Let's see. So why can't the short interest from the bullion banks actually be the miners? Well, I showed you the COT report, real estate PMs. Let's go back to the COT report. It could be the producers. You make a good point there. But here's the thing. I'll tell you why logically it doesn't make sense that it's all the producers. Well, 2 reasons I know why. Because there's a house and a customer account, and we know the bullion banks trade for their house account. There's a report you can get either from the CFTC or the CME group on that. But secondly, the producers short enough, you can see it right here, 35.7% or 59,000 short contracts, enough to cover their production for the year. In fact, they typically don't short a whole year out. They'll short 1 to 2 to 3 to 4 months, depending on the production schedule. And the reason I know this is I have talked to a lot. I've gone to mine tours and I've talked with a lot of executives, and they tell me their strategies, and they all kind of differ. But generally, they may take a short position 2 to 3 months out. That's to protect their near-term position or any stockpiles they have. They could go a year or 2 out if they want, but it's almost never done. So this is basically enough to cover it. And yeah, a little bit of the swap dealers, but not. This is more than a doubling of production. In fact, when you see 1.6 billion ounces of paper traded on a day, you only produce 1 billion ounces of silver a year. So when you see on one day earlier this week, 1.6 billion in contracts come out in one day, 1.5 times the entire yearly production, that's not a logical consistency that it's the producers. it has to be another entity. I mean, there's no other possible logical explanation unless you think the producers are just throwing money at shorts for no reason and throwing away all their margin money. Because I mean, why else would you do it? All right, let's go to a couple more questions, guys, and I'm gonna wrap it up. I've got a dinner engagement here in a little bit, which I'm looking forward to. So we are gonna go back and see who else has comments in the chat. Who must ask JP Morgan those questions? Well, I would think it would be auditors in the U.S. Justice Department. I would think. I'm not an expert on that. What is the best way to increase demand on the 1,000 ounce bars at the Comex? That would be people standing for delivery. So why can't the short interest from the bullion banks be? Okay, I answered that question. Got that one. Any more thought in regards to attempting to crowdsource a large silver pull off the Comex? Guato asked that question. Guato, we did talk about, I had several subscribers email me about that, and it seems like that structure would be to set up a trust that already exists, because if you're pooling money and then you're having a representative go to the Comex, it's basically some sort of trust. It would be like an SLV, SIVR, PSLV, and those already exist. So we don't necessarily need to recreate that, although we could contact the managers of those funds and ask them to do it if you wanted. Or what we could do as the regular everyday guys is just go buy a physical, because at the end of the day, there's almost so much physical. It's only about 1 billion ounce produced every year, 900 and something million last year. So however you get it, it's going to decrement from that total. So I think maybe what could be more effective is we start a crowdfund and just buy physical, or maybe we just all go buy physical for ourselves, you know, and we educate and, you know, we talk about this and create forums and email and distribution lists, and we all do this, because at the end of the day, it's just about taking physical off the market. The Comex can't mine their own physical. So if we're taking physical off, no matter how we get to that physical, that's less available for the Comex trade. Let's see what else we got. Do you think there's a deeper conspiracy, the manipulation with the market, like JP Morgan is acting on the behalf of the Federal Treasury? I had posed this question. In fact, I posed it to Ted Butler over email. He says you can't really tell from the data, and he says he wouldn't speculate on that because it's not rational to, or at least, I mean, it's a possibility in his mind, but it's like, you know, why bother, because you don't have the data. And I would agree with him from a practical standpoint, we don't have the data. It's interesting to think about, because if you think about what silver and gold are, they're money, they're constitutional money. It's still in the Constitution. They've been money for 5,000 to 6,000 years. So if you wanted to perpetuate a fiat-based money system, that would be one way to perpetuate it, by suppressing the price of precious metals. Do I know that that's occurring? No, that's just speculation. But yeah, I mean, that could be an avenue to do that for sure. Let's see. Getting rich is accomplished by obtaining more money. Silver is money. Simple. Yeah, good point. I agree with you there. Okay, maybe last question, maybe next to last. Jared Diamond, do you think Wall Street bets is a problem solution operation designed to limit people working together, kill shorts? I don't know. I mean, could it be a psyop to get people to go long the stock market and not pay attention to other things and distract them? It could be. But it doesn't matter at this point. Even if it were, and I'm not saying I know that it is. I mean, anything's possible, I suppose, if we're just speculating. But it doesn't matter, because it's already spilled over into the precious metals, and that's the one that matters more to me, and I think matters more to everybody if you want to really end any sort of financial suppression. So at this point, it doesn't matter. It's a moot point, because if they designed it for that, it failed spectacularly. It's done and over and failed. Let's see. I will take one more. First Majestic shares, sell or buy. I will only tell you what I'm doing. I'm not your financial advisor. Please contact your financial advisor. I'm going to buy some. I just funded my account with a little bit more money. I'm going to take some shares, and I may do some options as well. I'm not telling you to do it. That's a speculative trade. It is totally up to you. Disclaimer, this is just what I'm doing, just my opinion. I can't decide what you should do. That is up to you, but I'm going to buy some First Majestic, and I will take a nice little position in it and a position in the options as well. And we'll see how that goes. All right, guys, I think we are just about the end of it. I wanted to thank everybody that stopped by. I want to thank Chris Marcus from Arcadia Economics stopping by and giving his perspective for about 40 minutes on the silver market. I've gone on for about another 40, 50 minutes as well and showed you a lot of data and news references. You guys can stop the video and look at those news references. They're all authoritative references from the lead financial press and from the regular CFTC and the CME group. And we're just asking questions, trying to put the dots together. I invite anybody on my program who trades this market, who is part of the regulator, part of the bullion banks or producers who want to talk about how this works from the inside and provide us data that we cannot see that's available externally to us to change or alter or better inform our opinion. But we can only make these opinions and these speculations and ask these questions based upon what we see that's publicly available. So if you want us to have a different opinion, you have to provide more information. I'm happy to take that and put that on this program if anybody's listening that wants to do that. Till next time, guys, I've had an absolute pleasure. This is Rob Keents with goldsilverpros.com.